It's 2013. Bitcoin is worth less than $100. The world thinks it's a joke, a nerdy internet experiment for tech geeks and libertarians. And somewhere, quietly, someone buys millions of dollars worth of it, and then completely disappears. No movement, no noise, nothing, for over a decade. And then, out of nowhere, they wake up. That's not a hypothetical, that's exactly what just happened. And if you know anything about how crypto markets move, you know that when a wallet this old, this large, suddenly comes back to life, the entire industry pays attention. We're talking about a Bitcoin whale, one of the original ones, who just transferred $40 million in BTC after sitting completely silent since 2013. 12 years of absolute stillness, and then one transaction, one move, $40 million. Now, before you write this off as just another big transfer, stop, because this isn't just about the money. It's about what this signals, what it means for the market right now, and what it says about the almost mythological nature of early Bitcoin. This wallet is what the crypto community calls a Satoshi-era wallet. Created and funded in the earliest days of the Bitcoin network, back when only a handful of people even knew what blockchain was. The people holding these addresses weren't day traders or hedge funds. They were pioneers, true believers who saw something in this technology before the world had language for it. And this particular whale held through everything. The 2017 bull run, the 2020 crash, the 2021 peak near $70,000, the brutal bear market of 2022. Every single price cycle, this wallet didn't move, not once, until now. So what changed? The transfer didn't go to a known exchange. It didn't land on Coinbase, Binance, or Kraken. It moved to a brand new wallet address, clean, no history, no trail. That one detail is what has on-chain analysts working overtime right now, because it opens up a very interesting set of possibilities. The most straightforward explanation? A simple security upgrade. Crypto best practices have evolved massively since 2013. Moving funds to a modern hardware-secured wallet is smart housekeeping. Boring, but plausible. But then there's the other explanation, the one that's harder to ignore. This whale could be positioning, quietly staging assets before making a much larger, much more deliberate move. An OTC deal, a structured sale, or something else entirely that we haven't even considered yet. Because with wallets this old and this mysterious, you genuinely never know who's on the other end. Here's what the mainstream coverage keeps missing, though. This isn't isolated. Over recent months, we've seen a clear pattern forming. Dormant wallets, some silent for 5 years, some for 10 or more, have been activating at an accelerating pace. And almost every single one of these movements has clustered around periods of peak market valuation and elevated volatility. That is not a coincidence. That is behavior. These early holders didn't survive the chaotic, lawless early days of Bitcoin by acting on impulse. They are calculated, patient, deliberate. When they move with intention. So when you layer that pattern on top of today's macro picture, Bitcoin pushing historic price levels, institutional inflows breaking records, global liquidity expanding, and then you see Genesis-era wallets suddenly coming alive, you have to ask yourself one uncomfortable question. Do they know something we don't? Or maybe the more unsettling question is this. What happens if even a fraction of these Satoshi-era wallets decide it's time? We're not talking about panic selling. We're talking about wallets holding assets acquired at prices so low, every dollar returned is pure generational profit. Coins that have never touched an exchange. The supply shock that Bitcoin bulls always reference assumes these coins stay dormant forever. But what if that assumption is starting to crack? This single $40 million transfer won't move markets on its own. In the context of Bitcoin's daily volume, it's a ripple. But in crypto, ripples have a way of becoming waves, especially when they start appearing in clusters. The timing here matters. The destination matters. And the silence surrounding whoever is behind this wallet That matters most of all, because this person isn't just a crypto investor. They are a living artifact of the original vision. And right now, at these price levels, their next move could reveal something critical about where this market is actually headed. The transfer is just the beginning of this story. What comes next, the chain reaction this sets off across the broader market, is something most people aren't prepared for.